I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. Nicholas Cruz, the former student charged with killing 17 people at a Florida high school last month, remained silent during a court appearance today. So a judge entered a not guilty plea on his behalf. Prosecutors filed formal notice of their intent to seek the death penalty on Tuesday. FBI Acting Deputy Director David Bowditch tells lawmakers the Bureau missed critical tips on its public access line prior to last month's school massacre in Florida.
On September 25, 2017, we received an email tip from a person in Mississippi who indicated that a person unknown to him posted on his YouTube channel the following text, quote, "I'm going to be a professional school shooter," end quote. The posting was from the username Nicholas Cruz.
Students across the United States took a stand and took a walk to protest gun violence today. Organizers hoped it would be the biggest demonstration of student activism yet in response to last month's shooting in Florida. In other news today, the Attorney General Jeff Sessions could fire former FBI Deputy Director Andrew McCabe just days before his scheduled retirement. The Justice Department believes McCabe was not forthcoming during an internal review linked to a Clinton Foundation investigation. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Bloomberg Technology is next.
And this is Bloomberg Technology. Coming up, the THERANOS endgame. The SEC accuses Elizabeth Holmes of years of lying and fraud. We will read the fine print. Plus, Tesla's talent turnover. 3 senior executives hit the road just weeks before a critical progress report for the Model 3 goes public. And a new frontier emerges for venture capitalists. Why startup investors are starting to look harder at America's Midwest. But first, to our lead. THERANOS CEO Elizabeth Holmes has been accused of fraud by the SEC. That's in addition to the 2-year ban she was already serving from operating blood testing labs. The suit and settlement announced Wednesday detail how Holmes and her chief deputy lied for years about their technology, snookered the media, and used the publicity to get investors to hand over more than $700 million to keep the closely held company afloat. You will recall the health tech company claimed it could run multiple tests on just 1 drop of blood at a fraction of the usual price, but was forced to shutter its labs after thousands of patients' results had to be corrected. Joining us now in New York, Bloomberg Gadfly's Max Neeson, who covers biotech, pharma, and healthcare, and with me here in the studio, Bloomberg Tech's Olivia Zaleski, who covers all things startup and VC. So, Olivia, remind us a quick overview of THERANOS, why this is also relevant, and how it got into trouble.
Just a fascinating story here, and fascinating filing that was dropped today accusing Holmes of this massive fraud in which she used the media and defrauded investors. So really, if you step back and look at this company, she was promising that you could do hundreds of different tests just from the prick of a finger. It turns out that you really couldn't do more than a few dozen tests, and that they were using their competitors' technology. They also made statements such that they were going to have $100 million in revenue in 2014. It turned out the revenue was a little closer to $100,000 right there. So all sorts of bold statements, and I think it's sort of this symbol of Silicon Valley, where companies feel the need to fake it till they make it and make bold promises and actually say that those promises are a current reality.
Now, Max, I remember the customers who came forward saying their tests were wrong, and we're talking about, critical tests about, one's health. What is the scale of fraud that Holmes is believed to have committed?
So I think that's something that gets forgotten when you have such a long kind of financial fraud focused investigation and settlement. So this company, in addition to defrauding investors, also ran what amounts to, at the very least, a badly run, if not fraudulent company, promising something they couldn't really deliver. And they went on to void a bunch of blood tests that people may have made, healthcare decisions based on. So that's why I think that, even though this SEC investigation is settled for Elizabeth Holmes, this might not be the end of the story for her or for THERANOS. There's still the chance that there might be criminal charges filed as well.
I vividly remember when the Wall Street Journal published its first investigation of Elizabeth Holmes and THERANOS in October of 2015. She then appeared at a Wall Street Journal conference to respond. Take a listen to what she had to say at that time.
I read what was written in the article. We disagree with it. We think it was false and we think it was misleading. I know what we've done, which is the decision to voluntarily work with the agency. We interact with them all the time. We've chosen to take a path that is hard, and I believe in it incredibly strongly because it's the right thing to do. And I personally, in Arizona, worked very hard to change the law to allow individuals the right to order lab tests directly. And I can't do that without knowing that the tests that are offered are of the highest quality.
Meantime, the SEC has said, as a result of its investigation, innovators who seek to revolutionize and disrupt an industry must tell investors the truth about what their technology can do today, not just what they hope it might do someday. Olivia, what is the SEC actually saying here?
And this is a huge statement coming from the SEC, which usually doesn't make such bold announcements in the press, especially. And I think they're really saying here, we're keeping an eye on you. They're using this as an example for other large unicorns here, especially ones that are staying private longer, to let them know that they're not going to be able to get away with making false statements and that they're watching very, very closely.
Max, does the penalty here, and walk us through what the penalty is, seem reasonable?
I was a little bit surprised. Well, it's definitely severe in certain aspects. Elizabeth Holmes has to give up a large portion of her stake in THERANOS. She's not going to have voting control of it anymore. But it's only a $500,000 fine from her personally. And considering the scale of the fraud here, they raised $700 million while lying to and misleading investors. It really seems pretty surprising that this is all that kind of happened, especially when we just kind of have a recent point of contrast. Another healthcare fraud for Martin Shkreli. He got 7 years in prison for what the government ended up pegging as a $10 million loss for investors. So this might not be the end of the story in terms of damages or losses.
What does it mean for THERANOS investors?
So this is an interesting question. I think we're going to see a lot more lawsuits. There's more to come. The chips are going to continue to fall. I think one of the most interesting things that we're going to watch for here is that actually Elizabeth Holmes was one of the company's largest shareholders. So she is one of the largest investors herself. And in many ways, she was sort of the victim of her own fraud. We know that at this point, she does need to return $18.9 million to investors, but that's just a small, tiny portion of the $700 million that she raised. So I wouldn't be surprised if there are more lawsuits, and that if that various investors go after members of the board and various people who may have known about what was going on at the company.
It's unclear, Max, how much THERANOS is really, simply one egregious example, or whether other biotech, health tech companies out there are pushing the boundaries in a similar way. What is your sense of that, and whether or not there will be, wider examinations or a wider crackdown on other companies in this space?
I think I'd come down on the side that this was a kind of if not isolated, definitely particularly egregious and unique example. THERANOS operated in something of a regulatory gray area where FDA scrutiny and approval for lab tests is not quite as rigorous or consistent as you might get for drugs or other things. And I think there's still a lot of interest in the sector for companies that actually, have a better track record of explaining what they do and how they do it, as opposed to THERANOS, which was a lot more secretive. You're definitely going to, I think, see a lot more scrutiny and a higher level of diligence, especially for in the case what you had in the case of Theranos, where it was investors who weren't really subject matter experts investing in something that was a really complicated scientific task. I mean, if you want a recent example, one of the biggest recent health tech private investments was in Grail, which is a company that's trying to develop basically a blood test for cancer. So if there's still interesting science, people are going to invest, but they're definitely going to be a little bit more careful in the future.
All right, Max Neeson of Bloomberg Gadfly, Bloomberg Tech's Olivia Zaleski. Thank you both. We'll continue to follow. Now, speaking of the SEC, a former Equifax executive is facing charges of insider trading. Federal prosecutors announced on Wednesday that a grand jury has indicted Jun Ying for selling off nearly $1 million in Equifax stock just before the company's massive data breach was publicly announced. He allegedly received information in late August alerting him to the breach, but the company did not disclose it until September 7th. Coming up, WeWork is already leading the way in shared office space, and now it wants to make a push into education. That is next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Broadcom may have dropped its $117 billion bid to buy Qualcomm, but it is still moving ahead with plans to relocate from Singapore to the United States. The chipmaker first pledged to move its headquarters in November, a move some said was designed to appease U.S. officials. But President Trump still blocked the deal on national security grounds, ending a bitter battle that would have resulted in the tech industry's biggest acquisition deal ever. Well, by now you are probably used to hearing of WeWork's constantly evolving global expansion plans, but on Tuesday it announced a new type of initiative funding scholarships. The shared workplace company launched its first UK-based education offering, partnering with the Flatiron School to offer over $1.4 million in scholarships. They'll go to underrepresented groups in the tech industry. For more, Bloomberg's Caroline Hyde is standing by in London. Caroline?
Emily, thank you very much. Yes, we're joined by Eugen Miropolski. He is the MD, Managing Director for Europe, Israel and the Pacific for WeWork. Wonderful to have you here, Eugen.
Thank you for the invitation, Caroline.
So education in London, why start it here? You were in Washington, you're in Dumbo, but now you're moving to London. Why offer education within WeWork?
Yeah, so London was a logical next step for us. Since WeWork was founded in 2010, we've always been thinking about how can we help people be part of something bigger than themselves? How can we help them to create their life's work? And as the future of work is changing, also the future of education is changing for the requirements of the future of work. So London was a very logical next step for us, as London is our second largest market for WeWork worldwide, and there's a very booming tech scene here in London.
Also for underrepresented communities within technology, so women and those perhaps not so financially sound. How are you, why offer these scholarships? Why put $1 million in? What, is it just to get thumbs up from the governments and from diversity?
It is definitely a very important topic for us overall. Our communities are very inclusive at WeWork, and in the same mission with Flatiron, we're seeing that there are underrepresented groups in tech, and we want to help them to get the skills that are required for the future of their work.
London is an interesting market. You say it's your second biggest one. I think I read a stat, #1 private sector user of office space. I mean, out of everything in London, WeWork is the #1 user of private sector. How are you expanding here? Where else we can see you popping up? How many more venues?
So we have been expanding very fast in London over the last 3 years. We have currently 22 locations open in London and announced another 13 locations that will be opening very soon. So like this, we're creating really a network within London where people can work out of one location or another, but also what's most important is to connect with other WeWork members, and actually it is a global community in over 60 cities in over 20 countries all over the world.
Global, you're also in charge of Israel, you're also in charge of the Pacific, so Southeast Asia. Where are the hotspots that you're having to fly the most to and expand?
So I do travel a lot, and I think we do have a lot of hotspots, because what's happening is that there is a macro shift in the way how people want to work. And I think we're just seeing the beginning of that shift, where people don't want to go to work just to do a work. People want to have work that is enabling them to have a meaningful and purposeful life. And this is happening all over the world. There's definitely certain markets that have been more established for us, like WeWork was started in New York. London's our second largest market. At the same time, there are very interesting, very fast-growing markets like Berlin or any market in Southeast Asia.
What about acquisitions? Are you a man having to do deals? We see that WeWork'S just bought a digital marketing company. They've got into education with Flatiron. What companies are you eyeing up, and how does it build on what you're trying to achieve?
So we always think every single day, how can we offer the best services to our members? Because we really think, how can we enable them to create their life's work? And apart from the space and the community we offer, we're thinking, what other services that our members need? And like this, we're looking for natural extensions, be it in the education space, be it with Meetup, or be it with the health and wellness.
So some you're eyeing up in Europe or in Israel? Where would you see your acquisitions coming from?
So I think so far they've been from all around the world. I think as we've seen, some of the most recent ones have been from the US. But at the same time, even when we acquire a company in the US, we're thinking about how can we build a global community and how can we offer certain services globally.
I have to ask you, because it's fascinating that you're in charge of Israel as well, and there are reports out at the moment that you're perhaps looking for debt investors in Israel for not a small chunk of change. It's $1 billion of debt potentially from institutional investors. Is this correct reporting? Is there some, and why are you looking to the debt market?
So while I can't go too much into detail into the specifics of this, we are a very international company, and we are operating in now more than 60 different cities in more than 20 countries. I think what we are mostly focusing on right now is really building that community and then finding out what kind of services do they need. And sometimes in different countries, they also need different types of services. But for us, it's always very important to be very close to our community.
You need more funding? Do you need deeper pockets? If you're on the acquisition trail, you've already got $4.75 billion, a lot of money coming from the Vision Fund. Are we going to see WeWork needing more and more money?
I think what we will see is WeWork expanding very fast with its core product with WeWork across many different new countries as well. But at the same time, we will also see new product lines, be it with Flatiron, with Meetup, LYFT, or other product lines as well.
You're clearly a man who's going to be spending a lot of time on a plane. It's been wonderful having you here, Eugen.
Thank you very much.
So much. It is Eugen Mirapolsky, who, of course, is the Managing Director for Europe, Israel and the Pacific at WeWork. Emily.
All right, Caroline Hyde in London. Thanks so much. Coming up, LYFT cuts a new deal with Magna to develop autonomous cars. We will give you the details on the race for self-driving cars next. And if you have a Bloomberg terminal, check out TV Go. You can watch us online, click on your charts, graphics, interact with us directly over the IB. Just go to TV Go on your Bloomberg terminal, and you can find us on Twitter. I'm at Emily Chang TV. Check out TikTok by Bloomberg, the first 24-hour global news network streaming live on Twitter. This is Bloomberg. WhatsApp is throwing a new curveball into India's financial markets. The messaging app is launching a new payment service that allows its 200 million users to transfer cash to one another. Mobile payments caught fire after the government took 86% of paper currency temporarily out of circulation, which also temporarily disrupted markets. Credit Suisse estimates India's digital payments markets could be worth $1 trillion in 5 years. Now, LYFT has struck a multi-million-dollar partnership with North America's biggest automotive supplier, Magna. As part of the deal, Magna made a $200 million equity investment in LYFT, extending the ride-hailing company's most recent financing to $1.7 billion. Magna has also committed to spend billions working with LYFT to develop autonomous cars together. Joining us now with more detail, Bloomberg Tech's Eric Newcomer. So, Magna is a company that supplies automakers as big as Ford.
Right. So they're providing technology and sort of supplies to these automakers. And so the idea here is that they can work with LYFT to develop sort of, you could build onto a car this self-driving technology. Running around San Francisco, you'll see these sort of built on like LiDAR and other technology, so it's sort of added on top of the car and integrated.
So how does this fit into Lyft's larger strategy when it comes to self-driving cars overall?
Right. So Lyft's had a very partner-driven strategy, and really what they want is everybody to have self-driving cars. So what's valuable is the ride-sharing network, right? If their fear is that if one company has the technology, then that company has all the leverage, could build its own ride-sharing network. But they really want to facilitate getting that technology out there, which is why if you have a supplier like Magna sharing the intellectual property with Lyft, they can go off and sell it. Lyft can get their own version to put on their own platform, so it sort of allows them to stay competitive with their own self-driving technology and facilitate it getting out there to everybody else.
So how does Lyft's strategy compare to Uber's?
I mean, Uber invested super heavily in building its own. You know, obviously the acquisition of Otto, which became a debacle, and sort of the investments around Carnegie Mellon, and so spent a ton of money just building a huge autonomous vehicle program of its own.
Is it working?
You know, it's so hard to judge right now, but I think they're sort of continuing on, and we'll have to see sort of where they stack up.
So when it comes to progress, Uber, though, is certainly ahead of Lyft, right?
Yeah, in terms of its own proprietary technology, yes. Though Lyft has struck a ton of partnerships, including, you know, Waymo, Ford, General Motors is obviously a huge investor in Lyft. So it's a matter of whether it's going to be more sort of powerful to have your own technology or to have relationships with other companies that have that technology.
More broadly, tell us a little bit about how the Uber versus Lyft competition is shaping up since, you know, new leadership at Uber, and also Lyft just got a big hire, right, from Tesla.
Right, John McNeil, the Lyft's chief operating officer, came from Tesla, so that was a big get. I mean, the competition continues. I think more and more you hear Lyft sort of focus on trying to get, you know, to more than 50% in markets and try and push from, you know, we had reported that they got to like 33%, and now the question is, are they going to get a larger share? So I think that's the question. We'll have to see whether, you know, the brand Lyft that they got from, or really Uber suffered from Delete Uber, sort of carries Lyft beyond just sort of going to that 33% to sort of actually winning some markets.
Lyft recently opened its first international market, which was Toronto.
Right.
I mean, clearly Uber is around the world, though not always with success.
Right.
You know, is that going to be Lyft's Achilles heel, or will the focus on the U.S. and the slower growth actually benefit them in the future?
Well, I mean, it'll be interesting, you know, story versus profits. I think, you know, it should benefit Lyft in that they're competing in a sort of wealthier market where hopefully profitability is more possible. Certainly Uber is spending hundreds of millions, if not billions, around the world, losing money competing. We reported that they're in talks with Grab to sell their, Uber's in talks to sell their business to Grab in Southeast Asia. So, you know, Uber clearly isn't necessarily thinking those investments are something that it wants to keep spending money on. At the same time, you know, Uber will walk away with a large stake in those companies. You know, it owns like 17.5% of Didi. And so there's value to that, and we'll see if Lyft misses out.
Eric Newcomer, our valiant Lyft and Uber reporter, thank you.
Thank you.
Very much. Coming up, the majority of venture capital in the United States is funneled into companies in California and New York. But the Midwest, which has long been overlooked, may be the startup world's new darling. We'll hear from one VC based in Columbus, Ohio, who says Silicon Valley is no longer where it's at. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. At a UN Security Council meeting today, the UK Deputy Ambassador said it's highly likely that Russia was responsible for the chemical agent attack on former spy Sergei Skripal and his daughter Yulia. The Deputy Ambassador says Britain wants the International Chemical Weapons Watchdog to independently verify its analysis that a military-grade nerve agent from the former Soviet Union was used in the attack. Meantime, British Prime Minister Theresa May ordered the expulsion of 23 Russian diplomats in retaliation for the poisoning. She's also suspended high-level contacts with Moscow and warned that further action could be taken in secret. In southwestern Pennsylvania, Democrat Connor Lamb has a slight lead over Republican Rick Saccone following Tuesday's special congressional election. Some absentee ballots still have to be counted. Lamb has declared victory, but Saccone isn't conceding. House Speaker Paul Ryan says the Democrats' showing in that election is a wake-up call for Republicans.
They didn't have a primary. They were able to pick a candidate who could run as a conservative, who ran against the minority leader, who ran on a conservative agenda. You will have primaries in all these other races, and the primaries bring them to the left.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Tuesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Let's start, as always, over in New Zealand, where we've been trading for 30 minutes so far this Thursday morning, and the NZX currently off by 0.1%. And, of course, this is after all the US markets closed weaker. The S&P, the Dow and the NASDAQ all lower on weaker than expected retail sales data for February, and also these concerns over potential tariffs with China and the potential for a trade war. So it's risk off around the board today. Take a look at ASX futures, also weaker. Nikkei futures traded out of Chicago weaker. We have the Aussie dollar a little lower against the greenback, but still showing some strength overall, just above 78.5 US cents. Not much change to the yen US dollar cross. Let's get a quick check in on commodities. We also see oil, one of the few standouts here, a little stronger at 1/3%. Iron ore futures also looking reasonably healthy, while gold continues to ease. Elsewhere, we've got India and Indonesia both reporting data today, the trade balance and import and exports for February coming out of both of those countries. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. More than half of all venture capital invested in the United States goes to companies in California alone. This according to the National Venture Capital Association. But is half of all the innovation in the U.S. really happening here? Enter Drive Capital, an Ohio-based venture capital firm founded by two former Sequoia Capital partners, Mark Kwame and Chris Olson. Drive is now on its second fund at $300 million and has invested in 29 companies to date. Chris Olson, Drive Capital partner and co-founder, joins us now from Columbus, Ohio. So first of all, Chris, I'm thinking about companies like WhatsApp that Sequoia backed and sold to Facebook for $20 billion. How have the opportunities you found in Columbus, Ohio, compared to what you left behind in Silicon Valley?
That's a great question. I think what we're seeing here is they've dramatically exceeded our expectations. So to give you some statistics, when we first got here, we didn't know how many companies we'd see on a year. We started out, we saw about 1,800 companies a year. Last year, we saw about 3,500 investment opportunities coming into Drive. These were inbound referrals of Midwest technology companies. So, you know, that compares to maybe what a typical Silicon Valley firm would see is about 4,000. So we're not quite at Silicon Valley's level, but I will tell you there is a lot more here than even we first anticipated.
So Peter Thiel is leaving Silicon Valley for LA, calling it toxic. The New York Times just did a big story about Silicon Valley VCs visiting the Midwest, saying that Silicon Valley is over, a little tongue-in-cheek. Do you agree or disagree?
I don't know that Silicon Valley's over. I mean, to me, to say the amount of $50 billion or so that gets invested into Bay Area companies from the venture world on an annual basis, to see that that's the end, I don't know how that happens. What I do see, though, is what's happening out here is just starting. And we're seeing today is a thriving ecosystem of lots of technology startups with real innovation and entrepreneurs and founders who are creating next-generation artificial intelligence platforms, next-generation agriculture, all kinds of things in robotics, where it's hard for me to look at what's going on here and say it's anything other than the frontier of innovation. So I see what's going on here really starting to emerge and kind of catch up to what has maybe initially started in Silicon Valley.
So is the amount of investment that is going into California and New York, if it is indeed, nearly the majority of all venture capital that's invested in the United States, is that a mistake or a misallocation of capital? Or, are companies in the Midwest just coming into their own and will garner more, a larger share of that investment going forward?
I can only tell you what I see in our portfolio, which is that our companies are raising more money. And so today, from the coast that are coming in, so if I look at our portfolio now, we've raised about $500 million of follow-on capital from the coast, where venture firms from Silicon Valley, New York, Boston are flying on airplanes, coming here and saying, I'd rather invest in these companies in the Midwest than I would in the ones in my backyard. That's a new thing, and it certainly is a growing number. That number for us continues to double on about a year-on-year basis. So I think it's inevitable that more of these VCs are going to start staying here. And so I think as that starts to emerge, what you're going to find is more founders will get more capital, and the efficiency of that capital here goes so much farther. And so we've also seen a lot of technology companies that maybe have started on the coast. They're also moving their businesses here. We have 7 companies in our portfolio that have now moved here. So I think this is a trend you're going to read a lot more about. And as these companies get bigger, they're going to be more in the newspapers than they have been in the past. And I think people are paying a lot more attention now.
Luring talent, though, must be a huge hurdle. And I know you guys just hired your first female partner. What is the argument to move there, aside from the fact that it's surely cheaper when most of the talent is on the coast?
So cheaper does not help. I mean, to me, the Midwest has always been cheaper than the coast. We don't have an ocean. It's always probably going to be that way. I think the only reason people should move here and people should join jobs in Midwestern technology companies is because they believe this is their opportunity of a lifetime. And if you're somebody who's highly skilled and highly technical, and you're somebody who has the opportunity to work in any place you could work in planet Earth, you're going to choose to go to the place where you personally have the best opportunity. And people measure that in different ways. And one of those ways is certainly in looking at the amount of impact an individual can have in these companies. So I think we've got certainly seen a plethora of people from companies like Twitter and from Facebook, Amazon, Google, go down the list of technology companies that are joining the senior leadership of our portfolio companies. Those are great. But you know what? There's also an awful lot of people in these Midwestern cities that are now trained as engineers who have a fundamental understanding of these industries in which they've been working. And then if they apply that to what is kind of now a West Coast approach to building startups, they can really unleash a lot of potential. And we're seeing the numbers where today we have about 1,800 people in our portfolio. That's up from about 900 a year ago. And that number's probably going to double again this year. So access to talent here has actually been a lot easier than it is in markets that have a lot more startups that are competing for that same level of engineers and those same level of senior managers.
We've been covering the SEC accusing Elizabeth Holmes of THERANOS of fraud. So many investors were excited about her. Is that a failure of Silicon Valley groupthink? And, do you think you're, more protected from that kind of groupthink based on where you are?
I don't know what went on at THERANOS exactly, but I think what you're seeing with THERANOS as an example is, you can't just take technology and put an app in the App Store and start to make bold claims the way you can for a video game as you can in an industry like healthcare. I think the same thing, we see that certainly across our portfolio where companies that are in regulated industries, whether they're in insurance or they're also in healthcare or financial services, you need to invest early on in more regulation kind of support for your companies to make sure that your companies are compliant, that you are making claims that are accurate. And I think as Silicon Valley companies and as technology kind of sprouts into all these industries where there is a lot of required regulation, it's incumbent upon them to have a higher bar for the claims that they're making, where the downfall of this might not be that our revenue goes down. This downfall of this might be that somebody gets hurt. I think there is an added responsibility on those companies to put the guardrails in place to ensure that the end customers are not hurt in that process.
All right. Chris Olson, co-founder of Drive Capital, joining us from Columbus, Ohio. Chris, thank you so much for joining us.
Appreciate it. Bye.
Coming up, she is the founder of TaskRabbit, beginning her next chapter in the VC industry. Leah Buskey joins us to just talk about leaving the startup world and her latest passion project next. This is Bloomberg. Leah Buskey broke into the startup world as the founder of TaskRabbit, capitalizing on the explosion of the gig and sharing economy. Last fall, she started a new chapter as a venture capitalist, joining Fuel Capital as a partner. She has been an outspoken supporter of women in Silicon Valley and just launched a new organization called Shine Together to highlight stories about female leadership and growth. Leah Buskey, Fuel Capital partner, joins me now, and we're going to shine a light on Shine Together in a moment, but I do want to talk about your transition from TaskRabbit, which you ran for 8 years, and you moved into the chairwoman role, and you've joined Fuel. What's that transition been like from entrepreneurship?
It's been incredible. I mean, I founded TaskRabbit back in 2008, so it's been an entire decade since I founded that company, and what I realized after a decade was that I'm an engineer and I'm really passionate about emerging technologies, and that's why I founded that company. And so to now transition to this next chapter where I get to stay at the forefront of emerging technologies every single day and meet with fantastic entrepreneurs, it's been a dream come true.
So I'm sure you're drawing on you know everything you've learned about the sharing economy and the gig economy. IKEA, of course, bought TaskRabbit. You know, where is the sharing economy and gig economy going?
Well, one area that I'm really passionate about as an investor are consumer marketplace businesses. And marketplaces span the sharing economy, the gig economy. Certainly the future of work is changing, but there's lots of other types of marketplace models as well. And so that's definitely an area I'm spending a lot of time and focus in. One company as an example, it actually was my first investment at Fuel, is a company called WEWORK, which is a flexible jobs marketplace built by 2 fantastic women in New York City.
So, you know, talk to me a little bit about what you think is underappreciated and what you think is overhyped. I mean, we've been talking so much about crypto, so much about AI. You know, where do you see potential and where do you see like too much buzz?
Here's my real passion. I came into Silicon Valley as an outsider. And my partner, Chris Howard, who founded Fuel 4 years ago, was an outsider as well. He came out of Seattle. And both Chris and I have spent a lot of time building up our networks here, operating here, learning about how to build a startup in Silicon Valley. My passion is really finding those people that don't fit the mold in any category, in any area, whether it be AI or crypto, blockchain, whatever it is, whatever the hype area is, but finding the people that don't fit the mold, that are doing amazing things, and shining a light on them and investing in them, because they are really the future of these companies.
So we were just speaking with Chris Olson, an investor at Drive Capital in Columbus, Ohio. You know, the New York Times just did a big piece about Silicon Valley VCs going to the Midwest and saying that Silicon Valley is over. You know, do you see opportunity outside of Silicon Valley, you know, more than you see inside it at this point?
You know, I say that I see opportunities in a lot of places where other investors probably aren't going to take the time to look, whether that be geography, location. That could also mean pedigree, school, institutions. I sit on the board of Sweetbriar College, which is a liberal arts women's college in Virginia. They're doing a strong focus around entrepreneurship and STEM there as well. And so I think as an investor, if you want to stay current and stay with evolving technologies and the evolving landscape of technology, you have to be willing to look in all different types of places.
So let's talk about overlooked women, and you are launching this new thing called Shine Together, which, you know, it's sort of an outgrowth of Me Too and Time's Up, but, you know, spinning it forward and, you know, changing the conversation to a positive one. You know, what is the movement that you were hoping to create here?
So my co-founder, Jamie Vigiano, who worked with me at TaskRabbit, she and I had this idea that there was room for a positive conversation to happen within this movement. And so Shine Together is really dedicated to celebrating and amplifying women's stories and really celebrating the everyday heroes that you might not typically hear about.
So, you know, the stories about harassment and sexism continue to, you know, pour out. We've got, you know, a new story out of Microsoft that they got over 200 complaints from 2010 to 2016 about sexual harassment and discrimination. I keep getting questions about why hasn't the Me Too movement in Silicon Valley taken off more the way it has in Hollywood. You know, what needs to happen for that to happen, and will it happen?
Well, you know, here was really our inspiration. Both Jamie and I were deeply inspired by Valerie Jarrett, former senior advisor to President Obama, and all of the women in President Obama's cabinet and administration. They had made this pact, basically, to shine each other, to amplify each other's voices in meetings so that their ideas would be heard. So Jamie and I thought, what if you could take this concept of shine theory and apply it and scale it across all industries, across all different types of conversations? And that was really the precipice for the idea. And so we got Valerie on the phone and we said, tell us how you did this, and do you think we can scale it? Because what we do here in Silicon Valley, right, is we scale concepts, we scale companies, and Jamie and I are now working to see if we can scale this idea of shining a light on each other.
All right, Leah Buskey, now of Shine Together, Fuel Capital, and founder of TaskRabbit. Thank you, as always, for joining us on the show. All right. Coming up, when it comes to retaining space rockets, Elon Musk is the king, but when it comes to retaining talent, that's another story. That's next. This is Bloomberg. After conquering reusable spaceflight, billionaire Elon Musk is getting ready to take on comedy after finding himself and Tesla the butt of some satirical Onion headlines like Tesla debuts carless driver and Elon Musk offering $1.2 billion in grants to any project that promises to make him feel complete. The billionaire has been hiring former staffers and writers of that same satirical website, this according to the Daily Beast. No word on whether the secretive new comedy project will make its debut before Musk gets us to Mars. Well, when it comes to shooting a rocket into space and landing it back on Earth, for Elon Musk, that isn't a problem. But getting the Model 3 out the door and holding on to his Tesla executives, not quite so easy. Within the last 2 weeks, Tesla has lost 2 more top financial executives amid reports of quality issues with the Model 3, which continues to face production delays. So what can Musk do to get Tesla fully charged? To answer that, I want to welcome Bloomberg Businessweek columnist Max Chafkin in New York. So how serious are these departures, Max?
Well, I think it's important to sort of point out and remember that Tesla is not a normal company, in any sense. Elon Musk is a very hands-on manager. He has a reputation for being a hands-on manager, and there's always been a little bit of this kind of churn thing going on. The other thing is that we were sort of warned about this. Musk has been talking about, quote-unquote, production hell, and I think even, discussing various possible circles of production hell that they might be in. So the idea that you're losing some executives, that sort of makes sense and is maybe a sign that predicted thing is happening. On the other hand, I mean, this is going to be a huge uphill climb, and if they're not able to keep people, in that factory or managing the factory or running the business, I mean, that's going to be a huge problem. It's going to make it all the harder to get to these enormous numbers that they want to get to by the end of this quarter and then later in the year.
Now, quickly, Max, Bloomberg has built a special Tesla Model 3 production tracker. How is the company doing?
So yeah, and all credit to our colleague Tom Randall on this, but basically we think that Tesla, based on the VINs that they have been putting out there, that customers have been reporting to us, and that they've been sort of getting from the government, that they're doing about 1,000 or a little less than 1,000 a week. Now they're supposed to be up to 2,500 by the end of this quarter, so that they're a long way to go if you believe our model. Now we don't know how good the model is, but it's definitely a slightly discouraging sign.
All right, Max Chafkin of Bloomberg Businessweek, thank you so much for that update. Now, on a sadder note, Stephen Hawking, whose brilliant mind raged across time and space through his body, though his body was paralyzed by disease, has died. He was 76 years old. Hawking passed away at his home in Cambridge, England, according to a statement by the University of Cambridge. About 3 years ago, Bloomberg took a look at the technology that helped Hawking communicate his thoughts. Take a listen.
Medicine has not been able to cure me, so I rely on technology to help me communicate and live.
That vital system that Professor Stephen Hawking relies on has recently got an upgrade. tasks that used to take 3 to 4 minutes, like opening a Word document, now take around 10 seconds. Intel has been working with Hawking for decades, and the latest upgrade was over 2 years in the making.
We completely changed the way that he's interfacing with these aspects of the system to have him not rely on the mouse. So based on whatever he happens to be doing, we would surface the most logical things that he might want to do.
That also applies to Hawking's text-to-speech system. UK startup SwiftKey, whose software runs predictive text apps on smartphones, has doubled Hawking's speech rate. It considers what Hawking was last writing, whether there were any errors, and then tries to predict which character he might choose next. To do that, the SwiftKey program has to learn how Hawking writes and speaks by analyzing dozens of his documents, some published, others not.
The tests we ran showed that of a given body of text made up of a certain number of characters, Professor Hawking would actually only have to enter around 15 to 20% of those characters, and the rest would be inferred.
Now here's the crazy part. Everything Stephen Hawking does on his computer is triggered by one muscle in his cheek. An infrared sensor detects when his cheek muscle moves up, just the way our smartphones can sense when it's close to the face. Future versions of this technology are aiming to take a bigger range of movement into account.
But he can actually today say yes and no by moving, his eyebrows and by pulling his mouth. So one of the things that we've been working on is using essentially a camera system to detect these different movements. So now he can, for example, undo things by saying no, rather than having to go and manipulate the whole screen to get to a backspace button, for example.
Intel is even trying to develop brain control interfaces, which could help people who can no longer move any muscles at all. It represents the next leap for assistive technologies.
And that does it for this edition of Bloomberg Technology. Later, Bloomberg Television economics editor Michael McKee will be speaking with Canadian Prime Minister Justin Trudeau. You don't want to miss that. This is Bloomberg.